Hey, it's Nick from Peak Business Finance. I was going to write this out as a little Q&A type post, but it was too long, and I'm not used to LinkedIn's kind of limits on posts and stuff like that, so I still need to get used to that. People who know me know I can talk for days, and apparently I can write for days as well. So I thought I'd just make this a video, as there's not really a limit. It's 10 minutes. Hopefully I should be able to cover it in that time. If not, we'll make it into 2 videos. We'll see. But here's some questions I'm often asked about borrowing money from for your business. Normally asked by new clients and prospects. So I already have an existing loan with another lender, but I need some more funding. What should I do? Right, first thing you should do is approach the current lender that you've borrowed money from and find out if they'll lend you more money. If you've got a good relationship with them and you've made your payments back on time, at the very least they should be able to give you a quick answer. You might find that they're able to extend more money to you, and if they're not able to, you can find out the reasons why. It might just be a case of them, having sort of certain exposure to the sector that you're in. They might have a certain internal risk policy that says, if companies of your turnover in your sector, we can lend you X amount, which is what you're already borrowing. They might well say, actually, there's other risk factors, which is why we can't, lend to you. Or they might say, when we lent this money to you initially, you were, turning over X, you had Y in assets, that type of thing. And actually, we've seen that's dropped, so we wouldn't be happy to lend you any more money at this point. But getting those answers can really help, because then when you talk to future other lenders or other brokers, you can get a better idea of, you can give them a better idea, which allows them to make a more informed decision. And you seeming more switched on and on the ball can make you seem sort of more lendable, should we say. So if your current lender says no, next thing you should do, obviously I'm biased when I say this because I'm a broker, but speak to a broker. The business funding landscape being what it is, you'll probably almost certainly be able to borrow more money. It's just a case of whether you should. So if your profits and your cash flow support the repayments and the money's going to go towards a sensible cause, so that being something that's going to make you more money or help you save more money, then go for it. Then it's probably a good move. But if it's to kind of plug a temporary cash flow gap, or it's some kind of unexpected event, then getting a loan is going to be kind of like putting a plaster on a big wound. It might sort of stop the bleeding a little bit, but you need to go and fix the underlying problem. You need to go get it stitched up. So if that's the case, you might want to get, you might want to consult an expert. You might want to speak to a business advisor and get some kind of plan to get the business back on track. Because based on what I've seen, whenever someone gets a loan for some kind of unexpected event or to plug a cash flow gap, sort of 6 to 12 months time, they need another one. What tends to happen is the first loan to plug a cash flow gap, one of the first few loans you get in, nice interest rate, fairly decent, normally, can be single digits. Happens again 6 to 12 months time, then we're sort of getting into double digit interest rates and shorter repayment terms, which means, bigger monthly payments. So that's more of a drag on the cash flow. Then 12 months after that, you need to take out another loan, which, again, shorter payment period, bigger monthly repayments, higher interest rates. So it all becomes a drag on the cash flow. So yeah, it's important to have a look at the underlying problem and decide, what it is you need to do next and make a plan to sort of get you out of that hole and turn the business around. Next, I'm often asked, how much money can I borrow? So with loans, you've got, in a nutshell, you've got unsecured loans and secured loans. Unsecured borrowing, they call it unsecured. You're normally going to give a PG. Most lenders ask for that these days. Couple that don't, but as a general rule of thumb, expect that you're probably going to have to give a PG if you don't give any other security. But unsecured with a PG, normally up to 250 grand. Again, some lenders are much lower than this, but others, that's where they'll go up to. With security, sky's kind of the limits. They're gonna, lend a certain amount, again, it's based on what assets you have. So, a lender might have a policy that they'll lend you sort of 50% of the value of your assets. So if you've got £1 million in assets, then £500,000 is what you'd be able to borrow. And again, it depends on what it is that you're doing and what the money's going towards. If the money's going towards a good cause, so whether that's sort of buying some land, buying some property, then the lender's going to take into account the value of the property and, you know, advance a certain amount of that. So yeah, but for general sort of unsecured borrowing, for, I don't know if you're using it for cash flow or marketing or something like that, then general rule of thumb for an unsecured loan is 1 month's turnover. I'm often asked, does personal credit rating affect the company's ability to get a loan? Depends on the size of the company and how old the company is. For if it's a more established entity and there's multiple directors and there's a lot of trading history, you know, employees, stuff like that, not so much. For newer companies where the director's like a key piece in that in the operation and they're sort of still hands-on day to day, then it's going to have a much bigger effect. Although the personal and the business are separate, the kind of justification behind the lender's thinking is if there is an issue going on with the personal credit and I don't know, the director's going to go into a situation where they might miss payments or you know, get into a really bad situation where they could be faced with losing their home or something like that, they're probably going to look to draw out money at the expense of the business and the expense of the lender. Which, to be fair, most of us, if we're faced with losing our home, would probably do that. So, no, it doesn't mean you're a bad person if you do that, but lenders kind of want to protect themselves against that risk. So, yeah, if you've got any more questions about borrowing money for your business, ask me in the comments below. Thank you for watching. Bye-bye.